Top 5 long-term investments that beat inflation 2026. What if there was a way to protect and grow your wealth without having to worry about inflation eroding its value? Inflation is a silent wealth killer, but there are investment strategies that are designed to not only protect you from rising prices, but also help you beat them. In this video, we'll dive into the top 5 long-term investments that are proven to outpace inflation. These strategies go beyond traditional investments and focus on real assets and inflation-linked instruments that adjust their value or income in lockstep with the cost of living. Let's explore how you can secure and grow your wealth, no matter how high inflation rises. 1. Tokenized real-world assets, RWAs. One of the most innovative ways to beat inflation is by investing in tokenized real-world assets, RWAs. This strategy involves purchasing blockchain-based tokens that represent fractional ownership of physical assets like precious metals, private credit, or commercial infrastructure. By tokenizing these assets, investors gain access to historically illiquid markets, providing them with the opportunity to participate in valuable real-world assets without the barriers that traditional ownership might present. Why does this work? Tokenization allows for instant liquidity and 24/7 trading of these assets, which are typically less volatile and more stable than other investment types. The value of these physical assets, such as gold, silver, or infrastructure, tends to hold steady or even appreciate over time, especially during periods of currency debasement and rising inflation. Tokenized assets are often backed by intrinsic value, which acts as a hedge against inflation because they represent tangible goods or properties that hold real-world value. What sets tokenized assets apart from traditional investments is their ability to provide continuous liquidity while still maintaining the inherent value of the underlying asset. Investors can quickly buy or sell their holdings, offering flexibility without sacrificing the long-term stability these real-world assets provide. Additionally, tokenized assets enable fractional ownership, allowing even smaller investors to participate in markets that would otherwise be out of reach, such as high-value commercial infrastructure or rare precious metals. The market for tokenized assets is projected to grow significantly in the coming years, with tokenized gold alone accounting for roughly 70% of the commodity segment. This trend demonstrates the increasing demand for accessible, blockchain-based investment opportunities. By participating in the tokenized RWAs market, you can secure an inflation-proof, stable investment that provides both liquidity and value preservation in times of economic uncertainty. This strategy offers a way for investors to diversify their portfolios with tangible, real-world assets that remain resilient against inflation, giving them a strategic edge in preserving their wealth. 2. Series I Savings Bonds, iBonds. For those looking for a more traditional way to combat inflation, Series I Savings Bonds, iBonds, are an excellent option. These government-backed bonds are specifically designed to protect purchasing power by providing a composite yield that includes both a fixed rate and a variable inflation-adjusted rate. The inflation-adjusted component is tied to Consumer Price Index, CPI, which means that the bond's yield automatically adjusts to keep pace with rising prices. The beauty of iBonds lies in their simplicity and government backing. These bonds are a low-risk option for protecting your savings, making them an ideal choice for conservative investors who want to preserve their capital. The fixed rate provides a guaranteed return, while the inflation-adjusted rate ensures that the bond's value grows alongside the cost of living. Currently, iBonds offer a composite yield of 4.03%, with a 3.12% inflation adjustment, making them a solid hedge against inflation. This combination of fixed and adjustable rates offers both security and flexibility, especially during times of economic uncertainty. What makes iBonds even more attractive is that they're backed by the U.S. government, providing the highest level of safety for your investment. There's minimal risk involved, which is appealing for anyone looking to protect their savings from the erosive effects of inflation without taking on significant risk. Additionally, the interest earned on iBonds is exempt from state and local taxes, though it is subject to federal tax, which further enhances their appeal as a tax-efficient investment. Even with the limited accessibility, the ability to safeguard your purchasing power over time makes iBonds a strong addition to a diversified portfolio. 3. Global Infrastructure Income Funds. Global Infrastructure Income Funds are another excellent way to hedge against inflation. These funds typically own essential assets such as toll roads, airports, and utility grids, all of which are critical to the functioning of modern economies. What makes these investments particularly effective at beating inflation is that many of these assets have contractual inflation protection built into their revenue models. For instance, toll roads often have price increases tied to inflation, and utility companies adjust their rates based on rising costs. Investing in infrastructure provides a dual benefit. You not only gain exposure to inflation-linked revenue streams, but also participate in the ongoing global demand for infrastructure, which tends to grow as economies expand. With nearly 90% of the revenue from some global infrastructure funds being directly linked to inflation, these investments can provide a reliable income stream that adjusts automatically as prices rise. In addition to providing inflation protection, global infrastructure funds are increasingly benefiting from transition to net zero carbon. This shift is driving significant new investments in renewable energy infrastructure, efficient electricity storage, and more sustainable utility grids. As governments and corporations pour money into these sectors, infrastructure funds stand to benefit, creating long-term growth potential for investors. With relatively low volatility and inflation-protected income, infrastructure funds are an excellent way to safeguard your wealth against rising prices. 4. Real estate investment trusts (REITs). Real estate investment trust REITs offer another effective way to combat inflation while gaining exposure to the real estate market. REITs allow investors to buy shares in commercial or residential properties without directly owning or managing them. These properties often include office buildings, apartments, and retail spaces. REITs are attractive because rental rates on commercial properties tend to keep pace with inflation, and property values usually rise along with construction costs and general price increases. REITs can be particularly beneficial in times of high inflation because they provide investors with exposure to assets that naturally increase in value over time. As inflation drives up the cost of construction and property management, REITs are able to pass these costs on to tenants in the form of higher rent, which directly benefits shareholders. In addition, property values typically appreciate as the cost of materials and labor increases, making real estate a reliable hedge against inflation. While REITs can be sensitive to interest rate hikes, their underlying businesses remain resilient. The ability to increase rent and property values in response to rising costs makes them a solid long-term inflation hedge. REITs provide liquidity because they trade on major stock exchanges, making them a convenient option for investors looking to diversify their portfolios while still benefiting from the inflation adjustment mechanisms that real estate provides. 5. Commodity-based ETFs. For those looking to gain direct exposure to raw materials, commodity-based ETFs are an excellent option for fighting inflation. These exchange-traded funds track baskets of raw materials, such as industrial metals, energy products, or agricultural goods. Commodities are often the building blocks of the global economy, and as production costs rise, the prices of these raw materials tend to follow suit. This makes them an effective way to hedge against inflation, as the prices of commodities typically rise when the cost of goods and services increases. Historical data has shown that commodities can rise by 7% to 9% for every 1% of unexpected inflation experienced by the economy. This makes commodity-based ETFs a powerful tool for protecting your wealth during inflationary periods. These ETFs offer high liquidity and provide exposure to a wide range of commodities, reducing the risk of putting all your eggs in one basket. With commodity prices driven by factors such as supply-demand imbalances, geopolitical tensions, and natural disasters, these ETFs can provide both inflation protection and diversification. However, it's important to note that commodity markets can be volatile, so they are best suited for investors with a higher risk tolerance. By investing in commodities through ETFs, you can easily gain exposure to this asset class without having to manage physical commodities yourself. And there you have it. The top 5 long-term investments that can beat inflation and protect your wealth. From tokenized real-world assets and infrastructure funds to REITs and commodity ETFs, these investments are designed to keep your money working for you, even when inflation is rising. If you found this video helpful, be sure to like, share, and subscribe for more insights on smart investing and wealth-building strategies. Let me know in the comments which inflation-beating investment you're most excited to explore. Thanks for watching, and I'll see you in the next video.